everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs that I follow. I'm going to give you my financial opinions as we go through it. Again, I just want to remind everybody, I don't trade short-term stuff. That's not my bread and butter. It's identifying the good spots to be in the market through ratio investing, buy what's cheap, ride it with the right market conditions, and ride through whatever patterns that are created. Some patterns, you may think that you see a pattern, and it may not actually be that pattern. As long as the conditions are good and the ratios are cheap, I generally hold on and accumulate. So this was all driven by the people that wanted it on the channel. They like looking at the short-term market movements, and that's something that I decided to go forward with. So just as a reminder, that's kind of how I invest. So let's dive in. Let's take a look at everything. And again, if you need any help with anything, you can check out finding-value.com. We do have a 5 p.m. Mountain Standard Time question and answer session coming up. So let's go through it. So the DXY still strong, up 0.17% today. Not a huge up day, but it's been strong these past month or two. So dollar's been strengthening. The 2-year yield continues to look very strong. If we back out here, we're basically breaking above all this and making a new high here. So this is looking quite strong for the 2-year yield. It looks like to me that we are definitely going higher on short-term interest rates. 10-year yield up a little bit today, but not as strong. And again, this to me, if I were to look at it, it still looks like it wants to go lower. So usually you get a large selling pressure, you get a weak bounce, and then it rolls on over. I still think that's a possibility. But we are in a longer-term uptrend move. So are we going to get a little bit of a short-term dip before hitting some sort of trend line and then moving higher? Obviously, that could be a possibility, and that's probably the likelihood. Again, I don't know the short-term future movements, but if I were to guess, we're going lower in the short term. Based off of the selling pressure and this bounce, it's a pretty weak bounce. TYX also selling off. So the long end of the curve's coming back. The short end of the curve is going up, which means that the curve is inverting. And that is not beneficial for gold, silver, and platinum. It doesn't mean they can't go up. It's just a headwind. So we've got the nice big move lower, not really a big bounce yet. So I would say that we are still sideways to lower is where the market's going to go until we get a reversal candlestick. TYX, TNX ratio, again, we inverted today, down 0.26%. That is generally a headwind for precious metals. Usually oil does well in this type of inversion of the curve. We're at a very low level though, very low level. And this is generally the spot that I start to look at going long in precious metals. If I'm not already long, I'm always long some sort of precious metal, but gold does really well in these areas where the yield curve starts to come back and uninvert. Bond prices, we are getting a little bit of a bounce here. They do look good for a potential move higher. This is a 20-year bond. So what we're seeing is Powell continue to raise the short end of the curve, but the long end, I don't think is as convinced. That's why the long end is starting to come down a little bit and bond prices going up. So we could see perhaps the short end go up and the long end remain where it's at or maybe even pull back some. For yields that is, higher for bond prices. I'm coming down to gold. Gold obviously doesn't like that market condition, but it's being absolutely resilient in the face of stronger yield, stronger dollar. It's just hanging out right above support. To me, this looks ready for a launch. And all we're waiting for well, gold is waiting for are the right market conditions to come. They wants that curve to uninvert. If it uninverts, we're going up. If it continues to invert, all we've seen is a sideways type move for gold. So this is the curve inverting, and it's just been basically moving sideways in a controlled manner. I think the risk reward on gold and silver is pretty good here. I don't think there's a ton of downside risk. Where the downside risk would come from would be a deleveraging event in the housing market. But there's no deleveraging event coming, in my opinion. The overall market could deteriorate. And with that deterioration of the overall market, we could see yields come back. And maybe Powell would change his mind. But again, we'll see. Silver looking very resilient, very strong here. Big buying pressure, small selling pressure. That looks like it wants to go higher, much like gold does. I think they both look very good. And then platinum, platinum's been melting higher here off this downtrend line break, and it's just been kind of moving on up. Momentum's to the upside, still looks good for platinum, and let's hope the momentum will continue. XAU to gold ratio, the gold and silver mining companies underperforming the metal itself today. We're up against that support level, which is this trend line here that I drew in, roughly in that general area. Commodities still going higher. I know oil's heavily weighted in this. Could this thing just start ripping to the upside? Yeah, it could. It very well could. What we see here is we've got the pattern that's broken to the upside here. Let me get this blue fractal out of here. We've broken this to the upside, and now we could re-engage to the upside and start to move with more momentum and more force to the upside. What this could be is wave 3. And Powell is trying to stop it by increasing interest rates. The problem with increasing interest rates is it's also stimulative. He's not getting the full effect. And the reason he's not getting the full effect is when he increases interest rates, it's increasing the spending of the government. And that spending is stimulative by nature by running the deficits that they are. So money is still coming into the system. So this is wave 1. This is the wave 2 pullback. And I think wave 3 is underway. And he's trying to stop wave 3 by increasing rates rapidly. That's why we're seeing the short end of the curve go up. CRB to S&P 500, we are still moving a little bit higher in that ratio, and it still looks good to continue on up. GDX down a little bit, doesn't like that yield curve inversion, but it still looks okay. GDXJ, same thing, and SILJ, same thing. We got the initial move higher, small sell-off, and we'll see if we can get a re-engagement to the upside. But that highly depends on interest rates. That's what's causing the money flows to rotate into these areas. And if we get that money flow coming in, these will go higher. So we need gold and silver to really get their butt in gear and move to the upside for the mining companies' margins to start to expand. Crude oil up 1.13%. We have broken the downtrend line here. There's your downtrend line. We basically broken out today. Looks very good to continue higher. And hopefully that's what we see. So what I would expect is a sideways to upward move out of crude oil. I don't want to see a gigantic selling pressure day. It could come up, and we'll have to see next week what comes up. Nat gas bouncing off that support level that I drew in there. There's a lot of support in this general region. We are bouncing higher today, and maybe we can break this little downtrend we've got going. The downtrend line pattern looks something like this, and I do think that we are, basically breaking out potentially today to the upside. Again, that doesn't mean we just rocket higher. It could, but sideways to slightly higher is probably my guess. We are coming into the fall season, and that will, we could slow down because we're between heating and cooling season for a little period. XOP, yeah, you know me, looking very good today, up 1.29%, outperforming crude oil just a little bit. I think we are at a very good location where we could potentially break out. This is an inverted shoulder, head, shoulder, and we're looking for a breakout anytime now. That breakout, if we were to zoom in again, is right at about 150 bucks. We break above 150, it's looking very good. Now, I know a lot of people, the technical analysis guys, they would say, well, we're going to wait for the breakout and buy the breakout. Well, I don't know, guys. I'm not like I'm a hybrid. I bought a lot of stock in here. I would find it very difficult for the TA guys to beat that performance. So I'm doing things different. I did it based off of the ratios. I did it based off of this pattern that was created here and the ratios. And the market conditions with all the money that was printed, I thought inflation was going to come and money was going to rotate into uh, precious metals, commodities, oil and gas and all that stuff. And it did. And it's still going to continue to rotate in my opinion. So it is rotating in and it will continue to rotate in. And the ratios are still all very cheap. This is just another pattern that I've noticed across the board in commodities that it's going to break and rip to the upside. OIH also looking very good. We're down 0.09%. I know it doesn't seem great, but we're squeezed up against support and resistance here right in the corner. I think this is a great spot to be looking for energy service companies. We break to the upside, I'd be buying into that strength. Looking at this from a big picture view, I think we have a long way to go higher, a long runway. Last commodity bull market, we were in 0102, we were down here at about 350, basically where we are today. And that went all the way to a peak of $1,472, about $1,500. I think that could easily get to $1,500 again. And if that were the case, that would be a 5-bagger on an ETF, across the board ETF. Sprott Physical Uranium Trust still giving us the middle finger here. Look at that middle finger coming up. Just saying, all the doubters out there, there's the middle finger of the green army showing up. We were up a little bit of volatility, not much selling pressure. This thing isn't really selling off. So I think this looks very strong, and we could see a move to the upside in the Sprott Physical Uranium Trust still. URA also looking quite strong today, 1.82%. It tried selling off. Buyers came in, pushed it back up. Looks fantastic from my perspective. We've broken out of the resistance line that I drew in there, and we could go up, 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 and to a place far, far, far away. What movie is that from? Far, far, far away. Uranium also looking fantastic. Clear break of this pattern. I know a lot of people thought shoulder, head, shoulder, and that this was going to break to the downside. And which way did it go? It went up. Why did it go up? Why did that pattern fool some people or try to fool some people? The reason is that the market conditions are smack dab in the middle of where a bull market of commodities would be. I've had a lot of people tell me that we can't go up with interest rates going up. Well, here we are going up with interest rates going up. In my opinion, they are wrong. I am right based off of where we are in the market conditions and where interest rates are and inflation. Money rotates when interest rates go up like they have been. And a big bull market's going to come in commodities. That's what's happened previously. We do not have the threat of a deleveraging event in the real estate market. We are very tight in inventory. The inventory is not high. This, in my opinion, was a lead-in pattern. That lead-in pattern is going to be seen in other commodities as well. Now, does that mean that this can't break to the downside in other sectors? We still can, and the market can slow down. That is a possibility. Nothing is impossible. I'm just saying that this is the lead-in pattern. And this could be one of the leaders breaking out energy and URNM before, dry bulk shipping and other areas. URNJ getting that leverage that we were hoping for, up 2.66%, also looks very fantastic for a continued move to the upside. One person could conclude, maybe, that this is maybe an inverted head and shoulders, where it's kind of like a shoulder, a big head, and then maybe another shoulder section. Maybe, maybe not. But it looks good to continue higher irrespective of that, and we've got nice, good, a bullish candlestick today. TAN, getting a little bit buying pressure, still has some work to turn around and reverse that momentum to the downside. That's what I'll say there. COPX flat, and we're still in that sideways channel. That's what we've got going on there. And we'll look at the price of copper itself. A little bit later, lithium looking like it's trying to put in a bottom and turn around. It's going to take a little bit of time. We've got some momentum coming to the downside here. So be patient there, but that is a falling wedge. This is also that lead-in pattern that we see. In my opinion, it is. REMX has that lead-in pattern as well. That's the pattern here that we've got. We're also seeing a falling wedge, which is generally a bullish setup eventually when it breaks. And we are heading down towards the bottom here of the falling wedge, where that trend line is. SPX up a little bit. I'm not convinced that this thing's turning. We've got two large bearish engulfing patterns there. That generally looks like to me that we could potentially go lower. NASDAQ's got the same thing. I'm not convinced that this is just going to rip to the upside. We've got lots of selling pressure in that circle there. We've got a bearish engulfing here and a bearish engulfing here. And to me, it looks like we want to go lower in NASDAQ and S&P. Emerging markets, it needs to firm up. We still have increasing interest rates. We need a weak dollar. That weak dollar is not here yet. This is a good spot to be looking in this general area for potential upside. So what I think is going to happen is that the overall markets, emerging markets, and some of these Brazilian markets and whatnot will most likely go higher when the dollar turns over and yields turn over. XHB, we're still seeing increasing yields, and we're getting pressure here. Bearish engulfing there. We came back down a little bit. We've got a little bit of buying pressure today. That's why it's a hammer candlestick. Let's see where this goes here. More buying pressure, lower yields, probably higher. Higher yields, probably lower. MOO looks like it's trying to put in some sort of bottom, let it work its way out. We're a little bit early. We've got lots of downward momentum. Let's just wait and see where it goes. We are at support of this general area. Copper up a little bit on support. We're right on support for copper. Iron ore down a little bit, but again, looks like we're trying to break out to the upside here. What does that mean? It means that we could see dry bulk shipping start to firm up because a lot of it is tied to iron ore. Nickel down a little bit. We still have some downward momentum. I'd wait for that to work off. I wouldn't jump in front of it at this time. Aluminum also trying to firm up here. Just a slightly downward day today, but we do have some support underneath us. Baltic Dry Index down a little bit, but I still think we're going higher in this. Why? Because of the setup back here. If we were going to rip it to the downside, we should have done it here. I don't know why. Nothing's really different to the right-hand side. This is bullish because the buyers came up and broke that pattern and broke it to the upside. So I don't see why this wouldn't continue. So sideways to higher is what my guess is in the Baltic Dry Index. Newcastle Coal, I don't think this has been updating here, but in this general location, looks very good for Newcastle Coal futures. Bitcoin down a little bit. I would let this thing kind of work its way out. Same with Ethereum. Just let it work its way out. This could be a bear flag, and we could get a downward move out of this thing. And I think it highly depends on what interest rates do. Interest rates lower, I think this will go up. Interest rates higher, I think it's going to drag it down with the SPX and the NASDAQ. So the way I'm seeing this is that I'm seeing weakness in the overall markets. I'm seeing strength in a lot of the commodity markets. This is where we might get that divergence. And could there be days where things link up? Yeah, there could be. Where it's a sell everything type of event. It is possible. But right now, the way that it looks like to me is that commodities are going to outperform the S&P 500. That's why we're seeing the commodity stock ratio go up. We're seeing strength and breakouts to the upside for energy services, for uranium, and for a lot of these other commodities. Copper, I think, is torn in the middle. That's why it's sitting right on support. Doesn't know where to go. Because the overall markets and liquidity and the strength of the economy impacts copper. The weakness of the economy, if we have stagflation, is going to be beneficial to commodities, and I think energy could be the cause of maybe some of these problems. I think precious metals in that type of condition are going to just explode. So that's what I think. Give me a thumb up for the content. Subscribe to the channel if you haven't, and we'll see you guys next time. This is Finding Value.